I support this man right here, future millionaire.
That could be an intro. Alright, welcome back to another video. I know it's been a long time since I last made a video. So we're gonna try to get this going right away. So today, Monday, we had there was no news today, but trading was fabulous. If you knew what you were looking for, we had two really good potential entries today. So let me just show you, get right to it. Explain to you what I see here. So if we want to look at the higher time frame and see what Asia and London did. So as we can see, we have Asia didn't really do too much. Then we had manipulation London here, manipulated the Asia low, and then we expanded. So when we expanded London, what I wanted to see is a potential retrace to run higher, right? And I'm pretty sure we're probably going to keep running higher for the day or for the rest of the week. And as you can see, this is previous high right here that from last week. So let's get into this, get a little bit closer here. So obviously right here, Asia session didn't really do much. Then we had manipulation, the low of Asia low, and then we had an expansion. So at this point at New York Open, I'm not really sure what to expect. We're either going to retrace or we're going to consolidate. And since we had no news, consolidation is going to be a very big possibility. But as you can see here, it kind of did, but at the same time, it kind of didn't. So the first thing I saw was that we had a potential search and destroy. Basically, search and destroy is New York taking out London high and London low. But as you can see, it didn't quite do that. So usually, let's jump into a smaller time frame here. So this was on a replay that I did, and I came home and I didn't trade this. I replayed trade this, and these are the trades that I took. I didn't know what happened, so these are the trades that I would have taken on my personal account or a demo account or whatever. So we have here. So let's get rid of that right here. This indicator that I use basically just marks out Asia high and low, and then basically you want to see where did it manipulate. So in this instance, London right here already manipulated Asia low, but we didn't do one standard deviation. So every line here, or even up here is one standard deviation of Asia here, high and low. So what we want to see is the manipulation of at least one standard deviation or two, and then basically that being the manipulation, and then run higher. In this instance, it didn't quite do that. We had London, which accumulated, and then Asia accumulated, London manipulated and already expanded. New York is either going to retrace or it's going to consolidate. In this instance, we retraced and then we kind of expanded again. But it's not that great of an expansion. But let's dive deeper into showing you what exactly that I saw that you should be able to see every single day. And I see this it's in New York, it's so common. Asia, I don't know. I tried trading Asia. Asia's just like, you know. So we're gonna jump into a smaller time frame here, 1 minute. So I'm gonna turn this back on here. Asia, London, New York. Let's see. Maybe I should go into a little bit of higher time frame so then you guys can actually see, because I'm pretty sure this is gonna be like a blurry video. So it's a little bit blurry, but as you can see here, reason I say that this is the manipulation leg right here, if we go into the 5 minute time frame right here, notice how we just have a giant wick. This is the manipulation. Even if we go into like a 2 minute, for example, you can kind of see it just straight down and straight back up. So that would be the manipulation leg. As you can see, it took out Asia low. That's a very common thing. And then what we did is ran back up and took out London high, or Asia high, and we kept running. So by the time we got to New York, we don't know what the heck we're doing. So what I wanted to see here is we had 9:30 right here is when all the volatility of New York comes in, and we want to see this. What I wanted to see is basically target the discount of this expansion and then basically take along. So when we opened up, we created a first presented fair value gap. As you can see, this gray shaded area, first presented fair value gap, and I wanted to come down to discount, which obviously you could see it did. And I didn't really think too much of this. I wanted it to go like, I wanted it to take out London lows just because we had a potential search and destroy. So we had a move down right here, and then we came back up into I think the order block right here. We came up into an order block, respected it, and we displaced down. We created a first presented fair value gap, if we can see here, on a smaller time frame here. Boom, right there. From here to here, we had a first presented fair value gap, and then we came back down, came back up, respected it, and we dropped lower, basically running out this low, and this low. This will be a turtle soup. So basically a fake out to the downside, that when people see this, then they start they sell here, but instead it's gonna go back up. So I took a trade here, I took a sell here, and I held it down to here, but my target was London low. By the time I came down here, came back up and inverse this, what I did is put my stop loss to break even, and then watch it play out. And as you can see right there, I got knocked out. I got stopped out right there for break even. And then reason for moving my stop is because look at this time frame. We have 9:45. We have 15-minute macros here. It's 9:45. What I want to see is an expansion between 9:45 and 10 a.m. But as you can see, it did a retrace. So okay, we have a retrace, and then what we want to see is an expansion by 10 a.m. What did we do? We kept going, kept consolidating. 10 a.m. came along. What did it do? It just kept consolidating. So we're not going to see an expansion here, and the move of the morning is pretty much done. So we want to jump out and not consider holding this trade. So that's why I did what I did over here. I wanted to hold it till 10:30 to see if we can have an expansion at 10:15 or 10:30. And obviously we didn't do that. I got stopped out before 10:30, and so I watched it play out. Once I saw this come down, I'm just like thinking to myself, like, oh no, I might have just did myself bad on this one. Like, I'd messed up. Instead, I saw this right here. We, yet again, like I said before, how we did it over here, we manipulated again. So we created a low here. We then manipulated this. Now, what I'm looking for, I see ran liquidity. Okay. We look at the higher time frame. We look at this expansion move. We already tapped into OTE. These lines right here are optimal trade entry. If you know what I'm talking about with ICT. These are optimal trade entries. Right here is like perfect. So we created a low, kept going right here. Then we took out this low. Basically took out the liquidity where people would have put their stops, right? Excuse me. And then we have an expansion move right here. We completely destroy this high right here. Make sure you guys see that. Completely destroy this high. We have a market structure shift here. Ran liquidity. Perfect 1 minute fair value gap. We want to take our entry here. Let's do this. Take our entry here. Boom. And what I like to do is not risk a lot, obviously, and then put your stop loss down here. Now, where does our target be? Target should be London high. That's what I targeted, was London high. But to be on the safe side, just to make sure that it's not going to reverse on me, because I'm not the best professional in the world. So what I did was actually target this high, an internal high. An internal high is going to be a really great target if you're not sure if you're going to take out a very specific high, like a London high, for example. Now, I took this buy right here, and then I closed my position like right here. Once we had this expansion right here, I closed my position. So now look at this. This is pretty much a 2-to-1 trade here. Pretty much a 2-to-1 trade here. So you're risking, so let's say I risked $50, and in return I made 100. I risked 50 and made 100, for example. You know, so what you want to look for is this right here, a liquidity sweep right here, and then an expansion, a microstructure shift, a displacement. That's what we had here. This is and we had a perfect fair value gap that we could have entered in, and that's what we did. We entered here and then ran up and jumped out. Now after this move, I'm just like, okay, basically market already did the move for the day. You know, it's already 2 o'clock, you know, and it basically finally took out London high. So I'm just like, okay, I'm not really gonna expect too much, but yet again, we're back at it again. From 2 to 3 p.m., we have, I'm brain fart. We have 2 to 3 p.m. We have a what do they call it? Rush hour, or they call it silver bullet. I think silver bullet. I'm not quite sure. Don't remember. Basically, there's a lot of volume that comes in, and usually another setup occurs. And so I noticed these lows right here. Beautiful lows, like clean. Market obviously is not going to not going to leave that. So as you can see, yet again, the same setup here. We ran London high, liquidity. We displaced down, perfect fair value gap here and on top. Zoom in a little bit closer. Perfect fair value gap, 1 and 2. We have a change in state of delivery right here, perfect expansion lower, and that's when I entered here. You want to entered right there, set my stop loss to the top here, and then just watch to play it out. This is a 4-to-1 trade. So risking $50, you make 500, or sorry, 400. Like, and the target is these equal lows. So basically, you're kind of looking for a pattern, but you have to make this a rule. Let me do the draw tool here. You want to make this a rule of, where is my draw tool? Never done this before. Where is it? If I can find it. Hold on. Okay, here we go. What you want to see, so if you are bullish, you want to see this. Basically, this is the pattern you're kind of looking for. You want to see this being liquidity. You'd basically take out liquidity here, and then you basically have a market structure shift. Once you have a market structure shift, and what you want to see is a fair value gap. Fair value gap form in this area. Now, if you don't see a fair value gap, and you ran liquidity, you had displacement, which kind of looks like displacement, but there's no fair value gap, leave it. Just leave it. If you're starting out, just leave it. Don't bother. If it keeps going higher, you know, and like it bounced off something, like for example here. Man, find this draw tool again. Definitely not that path. Okay, here we go. Now let's say you did this. Went like this and then like this. You know, you had, let's say you this here, there was no fair value gap here, for example. Just leave it. But take a note of it, because you want to understand why it didn't. Why did it just bounce off here? Maybe you had a fair value gap here on this side. So, but don't use this to gamble at taking a high or a low. Like, use this as taking small pieces of the pie. You know what I'm saying? This is not for like, don't try to, like, we're at all-time highs. Don't do this. Don't like short at all-time highs, and don't expect to short or go or take a short. Always be bullish, because it's better to be bullish and have a good runner than be bearish and then be like completely knocked out. Like if you took a trade here short, we're very bullish. We came back down here and then we're very bullish upward, and then taking a short here is like kind of like, what is wrong with you? But basically, that's what you want to look for. It's a very common pattern that occurs, and if you stick with it and basically keep a couple rules to yourself as to when to use it, then you should be good. So only take the trade if it ran liquidity and if market creators did displaced. So if market ran liquidity, market displaced, market created a fair value gap or two fair value gaps, doesn't matter. Don't just pick one fair value gap and enter. If you missed the move, whatever. You were right. You could have had a perfect entry. You knew what you were doing. And basically that's pretty much it. But keep that in mind. Just to start off, just something basic. And market does this every single day. So if you keep a lookout for it, you will eventually start seeing it, and it's gonna come to you as in like this. For example, this is an A+ setup right here. And sometimes you will enter into trades where they don't have fair value gaps, and you understand why it moved in that direction. So over time, you will get the hang of it. It's the same concept every single day. You just gotta find it. So on that, I'll take it forward with a grain of salt, but this is what I use. This is what I see, and pretty much what ICT teaches. So if this doesn't make sense to you, then go watch his videos. He'll take care of you. All right, this is probably the end of the video. Then make it short. Maybe, I don't even know how long this is, but 17 minutes. Ooh. Yeah, this is basically Monday, the start of Monday. So like this week, I think is gonna be pretty good. It's gonna be a good week of trading. Yep, just keep an eye out for that specific pattern, and if you start implementing and start documenting it, you will see improvement, and you will start seeing it like literally play out in front of your eyes. And as soon as you start executing on this, it's gonna be smooth sailing from there. So with that, I'm gonna close off this video. Hopefully you guys enjoyed it. It's just something I want to throw out there. I know I've been gone for such a long time. I've just kind of been left you guys hanging. But yeah, that would conclude this video. If you guys enjoyed it, leave a thumbs up, subscribe. I will be getting up more videos. The reason I stopped making videos is because it really affected me a little bit with trading, and with work and stuff. So just because I was getting a little cocky about it. But yeah, with this, I'm gonna end it off here. Subscribe, like, and you guys have a good one. Take care.